Hi, it's Matt Sam at Fortress Financial, and I'm here to talk to you today about fees and their impact on your net worth. Bottom line is they eat away at it, whether or not you know it or not. And some of us have the feeling that, yeah, it's not good to have high fees, but is there really that big an impact? And that's what I'm going to talk to you about today, how dramatic the impact actually is. And being that in Canada, we have the highest mutual fund fees in the world. It's extremely, it makes it extremely difficult to make as much money as you should. A lot of our fees are over 2%, between 2 and 3. So we've got to look at that. And other fees, including hedge funds, are 2%, plus they make performance bonuses over 10%, where they get 20% of it. Money management fees can be range probably between 1 and 2%. So fees are high, and they are, believe it or not, negotiable. You got to know where you can negotiate, and there's a lot of hidden fees. But let me talk a little bit about the impact, because it's just huge. And I got some numbers I want to go through. And we looked here at a $500,000 portfolio as an example, and say you got 5% on that portfolio. After 10 years, it'd be worth $814. So you obviously made $314,000. You got to exclude the capital. Let's say you made 2.5% more. You eliminated basically all those mutual fund fees, and you did it in an ETF where you're paying 0.1 or something extremely low. Your return then would be up to over $1 million, be $1,030,515. So you'd have $530,000 in returns. That is $215,000 more, or 69% higher. That's huge. Let's say you use some of our methodologies and actually market timed a little better. You didn't get whipsawed when markets crash. And let's say that 5% went to 12.5. Very feasible. You lowered fees, your market time was good. 5 to 12.5 is quite amazing. After 10 years, it's worth $1.623 million. That's a return on your initial $500,000 of $1,123,000. Compared to that base 5% year, you're up 257%. Your return's that much higher, 2.5 times what it would have been. That's huge. Let's look at the impact of time. And I know these are numbers that can throw you, and we provide them on our website, so please have a look. But let's say this scenario went for 25 years. You'd feel pretty good because your $500,000 would be worth $1,693,000 at 5%. You're thinking, that was great. I was disciplined, did extremely well. Well, again, let's look at that 12.5. Say you were a prudent investor, knew how to market time, knew how to save fees, knew how to invest in momentum sectors. You did so much better. Well, that 1.7, or just less than 1.7 at 5%, at 12.5 becomes $9.5 million. That's how dramatic the impact of time and return is. That is 654% higher than if at 5%. If you just got the 7.5, it would be 114% higher, more than double the amount of money you would have got from 5 to 7.5. That's huge. So if anyone tells me, fees, what's 2%? It's not a big deal. It's a huge deal over time. You absolutely must manage your fees. You absolutely must learn techniques to market time, because I assure you, it's not going to be done for you. Come to Fortress. We have some great coaching platforms that teach all these methodologies, but hopefully you have a better understanding how basically fees steal your wealth. Thanks very much.